As long as you buy it at the right price, they can be very, very good investments.
I think both of us would probably agree multifamily is the best long-term asset that you can hold.
Yeah.
Welcome to the Old Fashioned Real Estate Show, where hosts Brian Leverage and Jeffrey Holst pour out old-fashioned real estate advice.
Episode 16.
Hello and welcome to the Old Fashioned Real Estate Show. My name is Jeffrey Holst and this is
Brian Leverage.
Brian, it's good to see you again. How are you today?
You too.
Thank you.
I feel like we've been hanging out for a while now.
Yeah, I mean, this is the fourth episode we filmed in a row and we're both wasted, so it could be worse. Anyway, so today we're going to do a kind of different episode of the Old Fashioned Real Estate Show. On this episode, we're going to talk a little bit about Brian and I's personal investing and where we're at now and what's going on in our lives. So I'm going to start out by asking Brian a couple of questions, and he might ask me a couple of questions, and that's going to be the show. So, Brian, how is it going today?
Pretty good.
Good. So, what's going on in your investment career right now? What are you doing?
Well, so I am building and selling new construction single-family homes. They are essentially entry-level to the market homes, and we've sold thus far 80% of them prior to them being completed. So,
how many are you building?
Right now, we've got 5 going. We've sold 5, and we've got about 10 more left to go after that.
Great. How long is that going to take to complete those last 10 units?
It was a 4-year project initially, so I think we'll probably complete it between years 3 and 4.
Okay, and you're like 2 years into the project?
Just about.
Okay, great, and that's going well.
Yeah.
Excellent. So I think you told me recently that you just bought a new duplex. Tell me about that.
Well, so we did. We bought it from a wholesaler, which we've referenced in previous episodes, and we are getting a loan from a local bank here to fund purchase, 90% of purchase and rehab expenses. And
That's pretty great, actually.
Yeah,
90%.
It's awesome. In fact, there's some wholesalers, or not wholesalers, there's hard money lenders that will provide you 100% financing in certain situations, subject to appraisal. But all that said, no, I'm excited because I think you have established some new rental comps in that same neighborhood.
I have.
Which
so
I'm very excited about.
I thought you might be.
Yeah.
So it turns out Brian bought a duplex on the street that I have 3 other duplexes on.
He's kind of pissed at me that I didn't split it.
Yeah, I mean, we should have been partners on it. But anyway, so yeah, no, we just recently re-rented one of our units at about $200 above what we had previously rented it for.
Which is great.
Yeah,
for both of us.
Yeah, no, it's definitely good. So we should continue buying in that neighborhood, I think.
Yes, or buy all of it.
Well, that would be good, but I don't know that it's all for sale. Although if you would like to buy my units, we can probably make a deal.
Mm-hmm. Maybe. So, what about you, Jeff? What have you been working on?
Well, I mean, I've been working on a rehab on one of my duplexes on your street. In fact, we're about halfway through with that. That's going well. I'm also about 4 weeks ago, Travis and I,
my partner in Detroit.
Yeah, that's right. We just bought a 41-unit apartment complex.
Yeah.
So that one's pretty exciting.
And you guys are looking at a couple others in the same neighborhood?
Yeah, we have some offers out on a 16-unit and also on a 66-unit. They just rejected our offer on the 66 unit, so that's still up in the air. But we have some faith that we might get to that eventually, and hopefully by the time this episode airs, several weeks from now, we'll have that under contract or maybe even have closed on it. So. Yeah, and the multifamily stuff is really great. I know you have some experience in multifamily, but what's great about multifamily is you can really control the value. So like our duplexes, they're worth whatever they're worth. Now, granted, raising the rents can help a little bit, but at the end of the day, the comparable sales are going to be
They weigh about 50%,
maybe even more, actually, because you've got to get the appraised value if you want to sell it. So yeah, that's what I'm working on now. The 41 unit is, it was a bit of a challenge. I'm not going to lie. We had, the seller was unsophisticated. Let's just say that. So it ended up being a situation where we had to really worked through a number of issues before we could close. There were a couple of units that were down, so it's really more like a 39 units instead of a 41 unit. We've made some good progress on that. Travis has got a crew building. There's a basement unit that's just about done, and we've converted one of the units to an office temporarily so that we can stabilize the property.
Jeff and I co-own a couple of commercial properties. We have a commercial office building very close to where we film these.
Yeah, it's like 150 yards from here, actually.
It's more like 150 feet. Really.
Yeah, you might be right.
So,
yeah, it's pretty close.
We recently completed the renovations and executed a 5-year lease with another 5-year
we did a video
option.
walkthrough halfway through the process, and that video, I'll tag it here.
So our new tenant, which is a title company, moved in this past week and are very happy with the outcome and the finished product, and that makes us happy, and it makes our investors happy, more importantly.
Right, yeah. So that deal was a deal where we took some investor money and we projected some returns, which I think are going to be very conservative, and I think we're going to hit them pretty well. So I think it's going to be great for the investors in that deal, and it's a deal where once it's fully stabilized and we have one vacant unit yet, it will cash flow very, very well for everyone.
It does. It cash flows well. I'd say right now.
Well, it cash flowed with 2 vacant units.
But it'll be a lot better.
Yeah,
There's no
so
denying
it cash flowed really well with two vacant units. With 1 vacant unit, it cash flows better, and with 0, it will be even better yet. So.
And on the flip side of that, we have a commercial building, commercial strip center in the East Ridge submarket of Chattanooga, and we've been through some ups and downs there, right?
And that one's been a little bit more challenging. I mean, we have 2 vacant units, and we have optimistic, prospective tenants for that. But again, that one cash flows with the 2 vacant units. That's about 30,000 square feet. And there's about, 7,000 or 8,000 square feet vacant.
Recently, there was a $125 million development that was announced in East Ridge. That is very close to this property.
This is going to be really beneficial for our long-term prospects.
And our investors,
And we actually talked about this on a previous episode because this is the building that we own under a land lease. So we talked about land leases and how those work on a previous episode, which I'll make sure is right there. I love doing that, by the way. Like, I can point up and it puts a little banner up there that says, suggested episode or whatever.
You're pretty religious.
Well, yeah. Do you see my halo right now? Anyway, so sometime in the future, maybe we'll get Brian's wife on here and we can have a discussion about religion.
That'll be a different podcast entirely.
No, it definitely would be. Definitely would be. Anyway, so that's what's going on in my world. Well, any other big projects you're working on?
We're taking a little bit of a dive into a couple multifamily projects right now.
Right, the 16 unit?
16 unit down in Fort Oglethorpe that we're taking a look at. Well-maintained property, needs a little bit of rehab. Rents are below market and at a price that I think, it'll work well for us.
Hopefully we have that under contract before this episode comes out as well. And the thing about when you're looking at a new property is it's really important to understand the market rents and the expenses and do a lot of underwriting on the front side so that you don't overpay. As long as you buy it at the right price, they can be very, very good investments.
I think both of us would probably agree. Multifamily is the best long-term asset that you can hold.
Yeah, in fact, so take the 41 unit that we just bought, right? So we paid about $1.7 million for it. It's public record, so I don't think we have to worry too much about disclosing that. But we think once we've raised the rents and lowered some of the costs, because of the function of cap rates, which, we'll do an episode about this in the future, but just a general rule is that, whatever the market cap rate is, you take the NOI divided by the market cap rate, and that is the value of the property. So on that one, we can raise the net operating income somewhat substantially, and it's going to raise the value to probably close to $3 million over the next 12 months. And I don't know where you can invest 20% down, say $450,000, and turn it into $1.5 million in 12 months in any function other than in multifamily real estate.
No, I would agree.
So I would definitely recommend you look at that and those kind of opportunities. We did a video about investing in other people's deals, so maybe you don't have $500,000 to put down, but you want to invest in multifamily.
Yeah.
You can check out that video, which we'll also tag up here. You get the point this time. You go ahead and do it. All right. So anyway, that's about it. What else is going on in your world? Anything exciting? It's your birthday coming up.
Yes, I'll be halfway to 90.
Yes, halfway to 90.
Yeah, halfway to 90.
Yeah, and we're gonna go up to Detroit and go to the Grand Prix, so that should be fun.
I've already got pole position in the lead car.
Nice.
That's what pole position means. I expect to win. Yeah.
I will be in the stands.
Yeah.
I'll just be watching from the sidelines. But if you do win the Grand Prix, I will give you 4 shiny quarters because I'm feeling very generous.
That's perfect.
All right. Well, I think that's it.
Hey, cheers.
Cheers. Enjoy
Thanks
the
for
show.
enjoying.
Thank you. And be sure to check us out on YouTube and go ahead and
Twitter and Facebook and all those
all
other
those
social
fun
media
places.
things.
Just subscribe to our show if you haven't already. We appreciate it.
We'll
Thank
see you next time. Have a great day.